Should I wait to buy Vancouver real estate? Is it a good time to buy real estate in Greater Vancouver, Fraser Valley, the Lower Mainland, wherever you're looking? That is the question we are going to answer in this video. I know there's a ton of confusion out there right now because we are in a transitionary period in the market, but what I'm going to go through in this video will give you absolute perspective so that you can move forward on your real estate decisions with confidence. My name is Mark Parsons with eXp Realty. Let's share my screen and get right into it. All right, guys. So this is how we are going to give you true perspective on where the real estate market stands right now, because anytime that we are in a transitionary or a shifting period, it is difficult for buyers and sellers to really understand where we're at without if they don't have true perspective on where the market has been. So that's what this is for here. What we're looking at here, we're really going to look at real estate from the most basic fundamental measurement, which is supply and demand, because that truly takes in everything else into account. Because you could say, well, what about interest rates, and what about this, and what about that? Well, all of those things fluctuate and adjust and move the actual supply and demand. So if we just look at the absolute most fundamental of supply and demand, it's going to account for all of the other stuff that's going on. And I'll show you as we get into it. So what we're looking at here is the Real Estate Board of Greater Vancouver for all property types from 2005 to 2022. So we're looking over, it's as far as I could get the data back so we can see what's happened before and where we're at now. This is a very bird's eye view, 10,000 foot view of the market. If you're looking to buy or sell in the market throughout the Lower Mainland, reach out to me and we can dive into these numbers specific to your area, because that's what will be most relevant. But this will give you a good idea on the overall of the market. So let me explain what we're looking at. How do we measure supply and demand? Well, in the blue, you have inventory. So that's the amount of inventory that was on the market in Greater Vancouver during this time. It's going back from January 2005 to April 2022. In the orange, we have sales. So this is how we measure supply and demand, is inventory versus sales. The ratio between those gives us a sales ratio. I like to call it the absorption rate because it measures how quickly properties are coming off the market through successful sales. And that's how we measure if we are in a buyer's market, a balanced market, or a seller's market. So the red line here, it represents the absorption rate of the market on every given month. And then the yellow lines here, what we're looking at, this is how we see, are we in a seller's market, a balanced market, or a buyer's market? Anytime the absorption rate or sales ratio is above 20%, which represents 5 months of inventory on the market or less, because just think if you had 100 properties on the market and 20 sold, that's at 20. And it would take 5 months, 20 times 5, to take all of that inventory off the market. So anytime inventory is below that, or the absorption rate is above this 20%, this is all in a seller's market here. In between 20 and 12%, this is a balanced market, and anything below that is a buyer's market. Now, why is that important? This is how we can determine if prices will be going up or down. Anytime the market is in a seller's market, so above this yellow line for a sustained period of time, typically 3 months or more, we're going to see upward pressure on prices. Prices will be a lagging indicator from the absorption rate. Anytime it is in balance, typically prices should be remained pretty stable if it's in between those two yellow lines. But in Vancouver, even in a balanced market, sometimes we can get a bit of a downward trend. And anytime it is in a buyer's market or below that yellow line for a sustained period of time is typically when we watch prices go down. Now, how does this compare to prices? Well, below here on the exact same timeline, we have prices. So we can literally see how this how it correlates. So let's take a look here. Now, if we were to take a look at this portion here, when we saw that the market started to change and the sales ratio was shifting and the absorption rate was looking to go down, well, you can see there was still a bit of a trend upward because it is a lagging marker. And then you see kind of a downward trend in the prices there. While we were in the balanced market here and a bit below, you can see that prices remained relatively flat, right? There's still a bit of an upward trend. Then we come along here And right here, this massive drop you have here, this was when the government in 2016 introduced the foreign buyer tax, when really what happened there, people thought that the market was falling, but it was because government intervention. People were a bit afraid, so they were being hesitant, but it had nothing to do with the fundamentals of the market. But you can see while that went down, look what happened to prices. Now, why did it not continue or stay down there? Because it had nothing to do with the fundamentals of the market. It was the government changing the rules in the middle of the game, and then people were very hesitant to play. But after that was the rule and people accepted that, then you can kind of get the upward trend here. And what happens there? The price goes completely up. So the point I'm trying to make here is by watching this, we can truly see, or at least get a firm indicator. Now, even with this, I'll say predicting the market more than 3 months in advance is almost impossible because a lot can change during that time. But then again, as we get, this was in 2020, so this was just after a little bit of Corona. And you can see that we had this right here. We had a spike that came down because people were unsure of what to do. And then once we watched the market, people were going in. I mean, you can see the whole time it's been above this, the seller's market there. So what I'm looking at is here when it came above the seller's market, you can see what's happened to prices. So the point that I'm trying to make is by looking at this, yes, has the market shifted? We have seen a big drop from how strong of a seller's market is overall. Now, just like we saw it happen here at 2016, and it did affect the prices, but because it wasn't a shift in the fundamental of supply and demand, it did not last long. It was more of the mentality of what was going on in the buyer's head, but that will never outdo the market if it's underpinned by a solid foundation of supply and demand, or like the buyers are still there. So now let's take a look at what it looked like in Fraser Valley over the same period. So we're looking at the same thing, guys, and just to show you that you can really watch and measure this stuff. So this is Fraser Valley Real Estate Board. Again, all property types, guys. This is very general. So if you're looking to buy or sell, like for instance, when we see it as high as 100% here at different cities in that market, it would have been as high as 150, 160%, or some down here. So it's very important if you're looking to buy, sell, or invest, reach out to me and we can dive into these numbers in your specific market. But I just want to give an overall bird's eye view of the market here. So again, it's from 2005, January 2005 to April 2022. And let's take a look at the market, guys. So here is when the market was, you can say was maintained above a seller's market. So we'll just kind of do this and you can look and see that, right? I mean, the market was rising there. This period here, we also got this where it looked like the market was going down, and you can see that prices down below, and this is prices down here. I hope that was clear. And then as we are in kind of mostly of a balanced market, right, you can see the prices typically, they generally stayed flat, exactly what we would expect. And that's why we use these as measurements. And then here, now we are above, other than a little dip there, we are really above the, we're in a seller's market, we're above the line, and you can see that the trend has gone up. And even when it really started to go was here, right there, and you can see it's like clockwork, guys. It is like clockwork how the absorption rate can indicate where prices are going to go. And until we see a material shift, now you can see in the Fraser Valley there was a much bigger drop here than if we looked at. We had this in the real estate in Greater Vancouver, and it just kind of flattened out prices, which prices have been flat for a couple months there. In the Fraser Valley, which had such an insane spike, and then now it's come down like this. We can see that prices have dropped. Now, will prices continue to drop? Not unless this drops down into here into and stays there for a sustained period of time. But the chances of that happening are very slim because there are so many buyers that were missing out on properties. Yes, they may be on the sidelines now. Yes, interest rates may make some things less affordable, but that generally doesn't change the person's desire to purchase property. In fact, sometimes it can even speed it up where they now know they can't buy a detached and then they go and get townhomes, and we can watch the market shift into what becomes where the heat comes on the market. And like I said, this is a very general, guys. This is detached homes, condos, and townhomes all across the Fraser Valley or all across Greater Vancouver. If we dive into certain property types in certain cities or different cities, they would all look completely different, but they all are part and parcel in making this up. But the point I want to make here is, so we see this drop right here. It's very drastic, but it is still in a very firm seller's market. Even when the market wasn't here, it was slowly trending upward. Can you see that? It's a slight, prices were stable, but it's slowly going upward. So if it is up here and starts going around this, prices are going to continue to climb, not like this, because it required this to do that. But also what I want to show you, so we see it drop there. When did we see that in the Greater Vancouver market? Well, we saw something that drastic right here, didn't we? When they introduced the foreign buyer tax. And that is what we saw on the prices. And then because it was still underpinned by fundamentals, it did not take much long at all before that correction was recorrected the other way. So that's the point that I want to make here, guys. If you have any questions at all, let me know. And again, this graph will look completely different if I took it and I made it for Coquitlam townhomes, or if I made it for Burnaby detached homes, or whatever the case. So whatever type of property you're looking to buy, sell, or invest in, reach out to me and we can dive into this for yourself. So the next question is, how does waiting work for home ownership? Should I be waiting? And this is what I want to show you, a couple things here. So what we're looking at here is a home ownership equity growth analyzer. Now, for simple numbers, we are going to say, we're just going to say cost of property $1 million with 20% down. So that's your down payment of $200,000, your mortgage of $800,000. Now, some who may get high ratio financing, that may go to 5% or a 10%, but just for the sake of example, we've got interest rates at 2%. For 25-year mortgage, monthly payment is this. Down here, what you have is the monthly principal reduction. So of this payment, more than half of it will go towards building equity in your home. And in the first year, you would have $24,000 in equity. Now, let's say interest rates went up to 3%. What you're going to see is the payments don't go as much up as the shift from principal payment and interest. So watch how much you pay toward your principal as more of your payment goes to interest. So when we go to 3%, it dropped down how much is going toward your principal or how much you're building equity. And we can take that to 4%, and it goes down further. What that means is more money is being paid toward interest. The biggest advantage of low interest rates, guys, is not only that, of course, you can afford to get more, but it is that more of your payment is going toward your principal as opposed to interest. A lot of people don't know that. So let's say you got in a mortgage $1 million at 2% here with no property appreciation at all. Guys, we just watched property prices go up anywhere from 20 to 40%, depending on the area, your property type, year over year or over that last year and a half. But let's say property prices went up 0 and you look out 10 years. Well, your principal reduction, because you're paying down this every single month, which turns into year, your principal reduction of owning, I mean, if you waited 2 years, it would be $50,000 in equity that you would be missing out on. And if you lock in your mortgage at the rates that we have today, I mean, you lock in probably for 5 years on $1 million property. That's $129,000 in equity that you would build without property prices going up at all. Now, let's just say property prices went up 3% per year. Now, this could be prices going down 3% one year and up 6% another year, but let's just go on an average of 3%. So now you're getting your principal reduction and you are also getting your property appreciation. On year 5, now you're sitting on $289,000 of equity because you have prices going up. You have your principal building down, and based off of your $200,000 down payment on year 5, that's 150% return on your investment. And guys, it's nothing in this market. 5% is actually very conservative from what we've seen over time. I'm not telling you what it's going to happen this year or next year, but 5% average per year looking out is not difficult at all to attain. And you can see at year 5 only, you've earned, at year 5, you have got over $400,000 in your property equity, including principal reduction, and that is 200% of your original investment of $200,000, and that's on a purchase price of $1 million. So if you have any questions at all, guys, do not hesitate to reach out. I'm trying to keep this short, but at the same time, if you're looking to buy, sell, or invest anywhere in the Lower Mainland, reach out to me. I can share this spreadsheet with you so you can see what it looks like for your purchase, and as well dive a lot deeper into the specifics of what it looks like for your property type and your area, because it will likely be somewhat similar but very uniquely its own based on property type and area. That's it, guys. Bye for now.